The global economy has had a very interesting time once again. Over the past 15 months, we started with Liberation Day tariffs in April last year. And then, of course, this year we've had Gulf War III. But so far, once again, it's been reasonably resilient. Growth has slowed, so the second quarter this year was reasonably soft. But now that the war looks like it's coming to an end, we expect growth to rebound in the second half of the year. Global energy markets have been really interesting this year, in large part, of course, because we've had this very big supply shock as the Strait of Hormuz closed. But the interesting thing is that even though prices did go up a lot, they only went up to about half the previous historical high in terms of oil prices, and now they're coming back down again. So what has happened, and I think it's again a story of economic resilience, is it turns out that there's a lot of oil inventory, there's a lot of storage. We're in oversupply before the war, and markets have looked through the event. And as we get a peace deal coming through, prices have come back to almost the levels that they were at before the war. The US has been really interesting again in that inflation's still a bit too high, but growth has been a bit soggy outside of AI where we've had a boom. So it's very uneven growth. You pull that all together, the market thinks that the Fed will be on hold over the second half of the year, and that feels about right at the moment. Europe is really challenging, and it's challenging for a bunch of reasons. It's partly structural. The competitiveness of the manufacturing sector, particularly in Germany, has been threatened by China. But there's also cyclical elements, and particularly when you've got an oil shock, they import a lot of energy. So those two have combined to see growth slow down again. I think it will cyclically reaccelerate now as we go into the second half of the year, but I think some of those structural issues are going to be long-term. What is interesting about Australia is that over the past year, Australia grew faster than almost any other industrial economy. The challenge with that has been that with unemployment still very low, it's quite a bit lower than it was before COVID, we've hit capacity constraints. So the RBA hiked interest rates 3 times earlier this year. We've now had the oil shock as well, and they are likely to combine to see growth slow over the second half of the year. But I think it'll be okay. I think it'll be a bit soggy for a time. I think inflation will come back down, and I think it will reaccelerate again next year. Equity markets have been really interesting again in that they've looked through the downturn, they've looked through the geopolitical shock. Equity performance has been very concentrated among AI companies, and given that it is a very exciting technology, I suspect it's got further to run. In Australia and globally, everyone's talking about productivity at the moment. I think AI will lead to a productivity boost, but the problem is it hasn't happened yet. So I think it's coming, I'm optimistic, but I think people jumping the gun a bit and it's not yet in the data.